in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Dawsontire & Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom delivering insights and dry shod boots, the official work boot of the Moving Iron Podcast. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and he is gracious enough to come on here once a week and talk about what's going on in the markets. And today is his day to shine. Chip, how you doing, bud?
Hey, pretty good. How you doing, Casey?
Not too bad, man. Well, there is kind of feels like we're sitting on a powder keg here that people are trying to either avoid from lighting or can't wait to light. But this drought situation that we see happening in South America and the drought talk that we talk about here in the northern hemisphere, up in North America, is fueling a lot of this trade that we see happening right now. And the thing about the drought situation we have right now in North America is, outside of wheat that should be dormant right now, there's not a lot growing. So I guess, what are your thoughts on what you see happening here with this drought monitor?
Yeah, I think that's a pretty good synopsis of where we're at. I mean, it is well below precip as far as this far into the growing season for both Brazil and Argentina. They have started to get a few rains, scattered rains around. If you're lucky enough to be getting those, they're very beneficial. And some good rains, although, net at this point in the calendar, they still are well below average precip. There's a couple kind of hot pockets, if you want to call them that, in both Mato Grosso, Brazil, which is one of their main growing areas. They grow, I think, upwards of 30% of the Brazilian beans come from that one state. It's massive in size. They still are struggling a lot with some dry weather and some real problems there. Portions of Argentina as well have been very, very dry. But we're just kind of coming into this volatile holiday period where normally the volume slows way down. It's already started to in some respects. And you're not feeding the bull every day with just a absolute arid and hot forecast, because there are some rains in there. So that's what makes it a little bit confusing. And you've seen that kind of reflected in the price action here recently in corn and beans, where beans try to rally, they sell off, they can't hold those rallies, but yet we're not selling off decisively either. So we're just kind of for this point in time slopping around in a pretty wide range here at 25-30 cents in beans and 10 12 cents in corn. We've kind of developed this sideways trading range for the time being, waiting on more information. And I think January could get very interesting as it relates to just how critical that forecast is down there. They're going to need more rain. It's nice that they're getting some right now, but January is really going to be where the rubber meets the road as far as the production in South America goes. And so that's kind of is setting the stage for a potential volatile end of the year here as far as any major changes in that forecast, if we see those. And really after the new year, I think that month of January could be really, really interesting. One, you've got the January crop report coming. That's going to give us our final yields and, final, won't be the final, but final yields, but, updates on demand and carry out as well as world numbers. So throw that in the mix with a very important month for South American weather, and it could be really volatile come the month of January.
Yep. All right, so let's talk about cattle complex for a little bit here. Box beef prices have been coming down, which has been bringing down the fats and feeders and everything else that's out there being traded right now. Direct correlation with that. When you look at what's going on there, it seems like they can't find a bottom. It just keeps getting, every week is just a little bit less than it was the week before. What are your thoughts on the cattle market?
Yeah, it's been a real volatile ride in the box beef. Not so much on cash cattle. I guess you could argue both ways. That maybe that is a is a good thing here. So, going back 5-6 weeks here, you had a lot of fear in the marketplace of shutdowns and I think once the election hit, Biden for a period of time was talking about we got to shut this thing down to get a handle on this virus. So I think he's since backed off on that, but it caused some panic type buying, like we saw the previous shutdown. Now, the thing about that was it shot box beef dramatically higher. Box beef went, I don't know, $30+ straight up.
Right.
Unfortunately, it didn't really affect cash cattle. It might have drug cash cattle a couple bucks higher, but not as high as what you'd have expected. And, now I think retailers and everyone have, that demand fulfilled, or resupplied, in the case of retailers, and box beef just imploding. And I guess the take home here is that it hasn't really been a huge drag on the cash cattle market, which is a good thing. And futures are stuck in the middle. They've had a nice rally here the last 3 or 4 trading sessions. $3.50 rally probably in the February live cattle, but yet as you kind of scan out and take a big picture look, they're really right about in the middle, honestly, of the last 2 months trading range. So kind of par for the course here. We talked a little bit about this in the case of the grain markets, waiting more information on South American weather, and they're just kind of slopping sideways here. Same can be said about the cattle complex here, and live cattle, at least in the case of the February, just really smack dab right in the middle of about a 2.5 month trading range here. Waiting to see, are we going to find some stability in this box beef market? Or are they going to keep imploding it? There's still pretty good. Real good packer margins out there. So that's a good thing. I mean, the packer and the feeder kind of, seem like enemies, mortal enemies at certain points in time. But, you need them both to make a little bit of money. And it could be argued the packer's making a lot of money right now, even with box beef coming down. And that's a good thing for the feeder as well, because I think the packer is still going to be able to kind of hold those bids together. So, like everything, I think you're coming into a couple-week period here into the holidays where things could get a little bit sloppy, a little bit, lighter volume than normal. But I still think that you're pretty decent footing here for a rally on into the first quarter of 2021, especially if we start getting, any weather situations. The plains are kind of dealing with some dry weather. There's not a lot of moisture or storms in the forecast right now. But as you get into Jan, Feb, March, if you'd see any, kind of adverse winter weather in the plains, particularly the northern plains, that could be enough to maybe cause some buying and kind of break us out to the upside. You look at the charts, we're kind of going a little bit of a triangle formation now in this February live cattle. And at some point in time in the very near future, you're going to break out of this and kind of have the market dictate which way it wants to go. So been very, very volatile ride. The feeders have been pretty choppy as well. They're holding together better. Quite honestly, if you look at March feeders, they're up, within a couple bucks of, about a 4-month high here, 5-month high. And so the little break we've seen off the highs in the corn market is help support the feeders a little bit. And, I think that's been something that's maybe stabilized the live cattle as well. There's often, give and take there between the feeders and the fats. So, I'm still hopeful just from a fundamental standpoint that the first quarter, you could see some better things, maybe push these February cattle up closer to 120 and maybe get to April's north of 120. And then I think that's, probably the next opportunity for cattle producers to maybe take a little risk off the board at that point in time.
Right on. Two things that are related to markets as a whole, and even the outside markets will be probably responding to this. So yesterday, as no big surprise, if you even were in earshot of a TV, they were giving out the first round of the Pfizer coronavirus vaccine to several frontline emergency personnel in New York City and some other areas around the country, and that seems to be a bright spot here for what we see with the coronavirus as far as getting things back to normal, and also the Electoral College got together and voted on getting the president all locked up here, and Joe Biden got 306 electoral votes, which makes him the next president of the United States. They still have to go through the joint session of Congress where they'll tally all those votes on the 6th, and then he'll be inaugurated on the 20th. So there's some stability there in the marketplace. 110,000 restaurants have closed, gone out of business since the coronavirus shutdown started, and with everything going on, I guess as you take a look at the virus news, the vaccine news that we've got now, how much response do you think the grain markets and cattle markets, livestock markets are going to have to that are going to be a positive kind of move forward, that, you know what, we're going to be able to see more beef demand and more pork demand, or those kind of things start taking place?
Yeah, I think that they're obviously that news, both of those news. You know, we got a new administration coming, it appears. Yep. As well as this vaccine getting rolled out. There is a lot of hope and optimism out there that the first and second quarter can be a little bit better, and we can kind of stabilize things, see the numbers go down, and maybe get a little bit back to normal, get restaurants back opened up, get people driving again. So that is maybe in the first half of 21 the biggest issue certainly for protein demand, meat protein demand, but also we're starting to see a little bit of weakness on the ethanol sector, right? Because of some of these shutdowns and at different levels across different states, and it's certainly curtailed driving again. Maybe not quite as bad as the lockdown, this past winter and early spring did, but. So those are big issues, and obviously it's going to take a little while to get the vaccine, where it needs to be and distributed. But I think that's the big hope here. I don't know if that's as big an issue in the first quarter, but for sure the second quarter of 2021. Agreed. That's going to be, I think where the market looks. If we're not seeing some movement by then, and the numbers are still up, I think that's going to maybe lead to a lot of disappointment and disappointment in the market's mind as well, and maybe some sell-offs at that point. But I think there is a lot of hope and optimism out there because of this vaccine, and we'll just have to see what the results are. That's just going to take some time to kind of get through the system and see if there is an effect and the numbers start coming down like everyone has their fingers crossed it will.
Mm-hmm. So on the pork side of the business here, China just miraculously has rebounded to 90% of the levels before the African swine fever in about 2 weeks. So they've done a great job of really getting those pigs going. So the last report I saw, this had been about 3 or 4 weeks ago, they were they had increased their herd by 30%. So in 4 weeks, they increased it almost back to normal. So I don't know what they're doing over there to breed pigs, but they're really getting after it. So obviously Chinese demand for pork is going to go down as they bring the herd back from African swine fever. So as you take a look at the pork complex, what we see happening there, what's your thoughts moving into the first quarter of the year?
Yeah, I think similar to the cattle complex, where I think there's a lot of hope and optimism that we see these virus numbers start coming down, maybe get a little bit back to normal, and get economies, state economies back open and restaurants back open. I think that would be a great a great improvement. I think that we're still kind of working through some of the liquidation that we saw because of the last shutdown and the packing plant problems that we had several months ago during that first shutdown. And I think that as you get into spring and summer, that second quarter, things could get a lot better than where they're at as far as hogs go. And for the time being, though, we got plenty of numbers out there, and the cash market struggled a little bit, and we're just kind of grinding sideways, and maybe that's a moral victory because you look at December hogs, they're trading just under 65. That's compared to where the greatest fears were 6 months ago. That's a great victory just to kind of be sitting here in the mid 60s on these hogs. And I think that and just under 80 on summer contract hogs. And so I think some better things are out there. I'm not saying you're going to new all-time highs. Yeah, that statistics you mentioned, I saw that myself, back to 90% of their average hog herd. They also said a week or so ago they had the same size corn crop as they did a year ago in spite of a super dry season into the north and record flooding to the south and more corn imports than they put into that country in 40 plus years, and everything's great as far as crop size goes and $10 corn domestically. So yeah, that's just par for the course for China.
Yeah, they have some incredible genetics. They can grow in underwater and when there's no water, so it's perfect. It's great.
Yeah, and apparently they've it's only 1 month, 1 week, and 1 day where they can put a new litter on the ground in hogs. They've jumped the hog, so to speak, I guess.
Right. Yeah, they're really getting after
incredible propaganda machine.
I tell you what, man.
I tell you what, the world has learned from them. So nothing but propaganda out there now. It seems like.
Yeah. They had. I was watching the rice market the other day, or a couple months back, and they were because in that area that flooded so bad was one of their key growing rice areas, and they said we're going to have we're up. Our rice production is up. I can't remember what it was, 10 or 15% over it was last year. I'm like, I don't think so. I don't think that's possible. But what do I know? I'm just an equipment guy. So,
well, one thing is for sure. All joking aside, China is, by all arguments, a bigger player than maybe even a lot of people thought. 5 or 10 years ago. And that whole region, India. Taiwan, Korea, Japan, massive users of a lot of agricultural products. So they're going to be a big player for years and years to come. And that's a good thing, but it is definitely a world market. And you're seeing right now, we've had a couple little hiccups. Russia had their problem in wheat and finally now going to, put an export tax on wheat, and that's really had the wheat market fired up here recently. It's dry in the plains. So if we're firing all cylinders in different major growing areas of the world, we can produce massive crops and have, oversupply. But right now we're heading the other way, and it can be very, very volatile. And, the big point is we can make that shortfall up quickly because of the yield potential that we have now, and if you get the Black Sea area, North America and South America, all firing on all cylinders with good weather and strong production, that produces a lot of grain and a big surplus to feed the world. Right now, we're heading the other way because of some problems, and that's just something we're gonna have to face. It's going to add the volatility that we've seen. It's going to make risk management more difficult, and it's more important than ever to have a plan. I see a lot of people even talking about the drought. Here's the funny thing, and it is true. I don't want to downplay it. It's very dry in areas. You look at a drought map in the United States, and it is arguably on paper drier than it was at this time in 2011. Right? We all know what happened in 2012, massive drought. Here's the difference. There wasn't one single person talking about a drought at this time, a spring and summer drought at this time in 2011. Right. And now everyone's talking about it here in 2020, about this drought coming in 2021. And it may come, but my point is, if you're building your marketing plan around the fact that we're going to have a drought next summer here, and we're going to have, $5.50 corn and $16 beans and $7 wheat, you may hit the lottery and
right,
and do really well.
Yep.
But you're taking untold amounts of risk. So if it happens, that's fine. We've got crop insurance, we've got other marketing tools to lock the downside, risk in. And I, for one, am not going to. I'm betting on farmers yielding, not a drought equivalent to 2012. And while it might happen, we'll adjust if need be, and have crop insurance be a backstop for us. But my point with that is, I'm just a little worried that we're getting, a little bit lined up on one side of the boat here, expecting this big weather anomaly this summer here in North America, and assuming that South America has this massive problem. While I think they are way below average precip, and there are pockets that are going to have way below average yields, I'm not so sure it's a disaster yet. I think the month of January is going to dictate, are we closer to 130 million ton crop in Brazil, or we're going to drop that down closer to 120? And I think either of those scenarios are still possible, but the next 45 days are going to be what dictates that. So Point being, a lot of risk out there, and a lot of hype, and you just gotta, try to stay in the middle of the road here and not get run over by the volatility. And one of the best ways to do that is have a plan, well thought out and well executed plan.
Absolutely. So if I'm working on that plan, Chip, what's the best way to get a hold of you for some advice, or maybe just to help me get in the right direction?
Yeah, best way is just give us a call at the office. It's 309-550-7213, and we'd love to chat with you about that.
Right on. I am Casey Seymour with the Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, I put a blog out over the weekend. Make sure you check that out. It's called Echoes of the Past, talking about the current combine situation that we see now, and how that's pretty much a similar carbon copy to what we saw happen in 2009 and 2010. So check that out. I'm going to put a podcast out kind of explaining that article a little bit, going a little more depth with a few more charts and stuff. So if you're an equipment geek, you'll like it. So check it out. Go to movingironllc.com for all the latest information on the Moving Iron Summit. That will be September 15th through the 18th in Nashville, Tennessee. Had to postpone it from the January dates we saw. Hopefully by September, everything will be back and headed in the direction it should be. So also check out, you can get the podcast on there as well. Also, you can find any blog that I've ever written, will be on there as well too. So check those all out and see what else you got. You got any comments, man? Hit me up on Facebook, Twitter, and Instagram, just like I said. Or you can send me an email at movingironpodcast@movingironpodcast.com. So until next time, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.